Hi, my name is Daniel Younis. I actually just joined ING in July. I think just a few words. Most of you probably know ING. We're obviously here in Germany represented as well by DIBA, so a German retail bank, Direktbank, and we're in real estate. We're on the commercial banking side, doing commercial real estate. We're a core lender, so you will not see us in some of the cities mentioned earlier, Heilbronn or Saarbrücken, or not to a large extent anyway. And we're focusing on investment loans, so no development loans. Thank you.
Great, thank you, Sven.
Hi, my name is Sven Wortberg. I'm a partner at King & Spalding in the Frankfurt office. The Frankfurt office of our firm is deeply embedded in the real estate industry and the capital investment industry. And well, I personally do for the most part, real estate transactions, and that gives a sign of the market. Currently, exclusively real estate transactions, and basically day and night.
Hello, my name is Markus Beran. I'm since 5 years with Beyerle. They're responsible for international money coming into Germany, and if investing and looking for loans, then they will speak to me or my team. We as Beyerle are similar like ING, only in the commercial real estate sector. We are part of the German savings banks group. That's where the retail part of the transactions take place. We, besides the normal origination of business, align very much our business to the savings banks, trying to give service and product there as well. And yeah, it is exciting times at the moment. A lot of money coming to Germany. We are in the spot where a lot of transactions happen. A lot of really exciting stuff is happening, and looking forward to it.
Great, Felix.
Cool. My name is Felix Bauer. I'm CEO from Deutsche Real Estate Funds. We are a student housing micro apartment provider, owner-operator, so we cover the whole supply chain from acquisition to management and exit. We have built up about 3,500 of units of student housing and micro-living. We are now also investing in the residential sector.
Catella, a Swedish-based company, stock listed in Stockholm and New York Stock Exchange, fixed income, equity, and real estate. Within Germany, 3 divisions. One is the fund business in Munich and Berlin. Second column is the advisory service in 5 cities in Germany. And the latest baby, 1.5 year old, it's the development case running out of Düsseldorf. And here in Frankfurt, I think there is one case in Niederrad, which we try to convert an old stock office tower into something called residential these days.
Okay, great. I wanted to start with you, Markus, actually. We've been looking at basically the same type of economic macro picture. How do you see that developing? You've got low growth here, low growth as well, across Europe, really. And the potential maybe for interest rate rises. I mean, that would be interesting to see. How do you see that as impacting the sort of real estate sector more generally, both within Germany but also across Europe in the areas that you work in?
Okay, the areas we work in is limited to France, Poland, and the Benelux. We have still a bit of stock in the UK, but due to the Brexit discussion, postponed the reopening of the branch there in April this year, and looks like it was a decision right to make. How do we see the market going forward? As long as there are no exogenous shocks impacting, it will be a similar year like this year. We had discussions also with other market participants in January saying, is the boom of year 2015 going to be repeated? A lot of big transactions taking private and Vonovia, whatever was there, has already happened. So we expected a lower figure for this year, and it seems the figures seem true. And I think we can expect for the next year similar level, maybe a bit less than this year. Competition is high on product as well, on finance as well, on any sector. We see the trend that participants go to smaller markets. We have requests in from cities we hardly have any transaction data on, and that makes it really difficult to transact also for our valuers to say how is the right price, what is the right value for that, and how can we put that into risk perspectives. Again, as long as everything is stable it looks predictable. But we have election year, and then you look out when something happens, might be foggy. Yeah?
Okay, good. And Sven, you said obviously that at the moment you're very busy in terms of exclusively on real estate, really. Does that indicate to you that in some ways Germany has been a bit of a winner out of the political instability, that everybody sees Germany as less risky? Is that what's driving that, or is it just more general appetite in terms of investors?
Well, I believe there's a lot of capital in the market that actually needs to be invested, and if somebody looks at Europe actually and picks a place where to invest it, then Germany is not the worst bet, and there was the UK also, and there are some question marks now, at least regarding the financial industry. So Germany, I don't know whether it has profited, but it has not. It had not suffered from this Brexit discussion.
Okay, good. And Daniel, from your point of view, obviously ING Ref global company, have you found more investors coming, because you're obviously active mainly in the core area? Have you found more international clients wanting to come to Germany? What's your sense of that?
I think coming back to the other countries, Sven was saying how busy he is. I think our colleagues across Europe are pretty busy as well. So it's not that money coming into Germany is leaving these countries, but I think there's a general, still a lot of inflow into Europe, and it's not only Germany. And I think I think we're seeing a lot of appetite in the Eurozone still. And we're also seeing German clients now a lot doing a lot of stuff in Australia, where we have a base, but they're active across Europe. So I think and that we're expecting that to continue.
Okay, good. And Felix, it would be interesting to pick up with you some of the things that Thomas picked out in his sort of summary at the end, which was that there was beginning to be a move much more towards some of these niche sectors, including residential, including student housing, and obviously micro-living, one of those niche sectors. Are you increasingly seeing that, and do you think that is based around fundamentals in terms of appetite from occupiers, or is that to do with capital looking for a different type of return profile? What's driving that?
I mean, student housing, micro-living has tripled in size in 2016. So we had 300 million of transaction last year. We have 1 billion this year. So yes, we see people moving from residential, from other sort of segments of residential into these special segments, student housing or old pension homes. And we see that people sort of look for stability there. I mean, the occupiers in those residential schemes are students or single people, so there's always the tenant risk is spread over a whole number of tenants. And yeah, I mean, as I said, 1 billion of transaction only in 2016, compared 5 years ago in the UK, the transaction volume was 1 billion in student housing. So what we're seeing is sort of a giant awakening at the moment.
And you're expecting that to continue, that sort of growth path here, really?
I mean, tripling in size, I don't think that, but I think, we will see 20-30% growth next year. I mean, only now big institutions are looking at micro-living, looking at student housing. There were sort of 3 bigger transactions this year, and that's going to continue. So we think it's a growing market. The rents are growing. Students are looking more and more for space to live. So yes, there's a growth there.
It will be interesting, and I'm going to check with everybody what is their nightmare scenario that's keeping them awake in 2017. Do we think Le Pen will get in potentially? Does that mean there's going to be another referendum in France? What happens then in Germany? At the moment, it looks if you look at a photo of the G7 from earlier this year, there's only going to be Merkel left. Yeah. So where do we think we are on the risk? And then I'm going to check everybody else just in terms of what they see as the biggest risk going forward. Thomas.
To be honest, I think the main risk for me is not the individual decision from different political parties. It's the non-decision process facing that, which means Miss May, and sorry for that, she's sitting there, and of course, from a rational standpoint, she have to wait what happened within Europe before she give us the letter that say goodbye. Sit and wait. What happened in France? What happened in Germany? So we can't expect any positively, negatively input from UK politics to the rest of continental Europe. They sit there. Similar to that, we are sitting there and looking what Mr. Donald Trump will face about, calling to Taiwan or whatever, I don't know, what happened. And so everybody's thinks, oh, by the end of the day, he will end up as a rational president, which is our hope on that, but we don't know, by the way. On the other hand, going to the Near East or Far East, Mr. Putin too, and all these things going on. So for me, the main thing is, of course, there will be some maybe surprising decisions by the elections next year in France and in Germany. No doubt. On the other hand, the time in between is for me is the most risk in that when you don't face any give answers, consolidate your household and budget things, and you make a non-decision thing and just try to postpone this thing by winter Q4 next year. This is for me as an analyst the most negative impact I see in the market. Positively speaking, in between, it's of course the time for investors to say, as long as it's uncertainty outside, let's start investigating and let's start buying a property more than ever, especially in the city centers. Sounds a little bit too simple, but it will be driven by rational investors with a pocket full of money on that, because the story it's rational, in my understanding.
No, I think the whole populism in Germany, in Europe is and in the US is really a problem. I am a big believer in the European Union. I was a big believer in the US. I think this sort of movements are really bad. Number one for the people, number one for sort of the development of the whole region. And number three, for business, and I think it's in that sort of following. In terms of what does that mean for property, I can only speak about Germany, and I think, if I would have 500,000 to invest as a private person somewhere, I would have invested in German resi. So I think all the sort of unclarities, all is sort of pushing people into investing in more secure things. So residential, in Germany, in European cities is probably pretty secure. Yeah.
Okay, good. Interesting. So you think that that's going to drive people towards these kind of more secure assets in a way? Yeah. Okay, Markus.
I would say the majority will act like that. The amazing thing about these elections is that there are people out there who give a certain option, and the others who are elected only say no, but they don't say what they want to do differently. And this trend you see throughout. Is it Trump who was very bullish? Is it now with Renzi in Italy? The no-sayers win, but they don't give an option, and that makes it as a bit foggy. So what do we really expect? You've seen the elections in Poland have pushed it to a bit extreme. They are challenging property transactions, because you have to pre-fund VAT, you get it back, and now this refunding mechanism is being challenged. That gives uncertainty to investors. That's something you don't want to have in an economy, and this uncertainty is definitely limiting business opportunities for those who are decent investors, but it opens maybe for those who take bigger risks a big chance.
And I think Poland's quite an interesting case in a way. We did a session on CE relatively recently. And what was interesting about that was, whereas kind of 2 years ago, in all of the sessions that we did focused around Central and Eastern Europe, Hungary was viewed as, politically unstable, very difficult, not a very friendly environment at all for investors. But now, just because it's stable, there's a different view about that, which is there's less certainty about what's going to happen in Poland. So actually, Hungary hasn't changed. But it's just perceived as more stable because of what else is going on around at the moment. And Sven, for you, in terms of Euro breakup stories because of Le Pen and France dropping out, and how many of those do you see as realistic? What things worry you?
Well, I would be concerned also about a European Union breakup with all the elections coming up, but more on a personal level actually as a citizen, not so much regarding German real estate, because I would think like investors will still ask, what's the safe haven or what is comparatively the safest asset class, and that might be Germany, or I think it would, unless there would be a shock that would just hit Germany. And as a case study, we had this external shock that it was the Brexit. At that point in time, we did a couple of transactions, also including UK money, and nobody asked me to draft a Brexit clause. I don't even know what it looks like, but most people said, like, make the contract fast, tight, so that nobody has second thoughts. Nobody had, but they said, speed it up and make it happen. So that was the reaction to that scenario, actually.
Okay, good. And from your point of view, Daniel, anything that you're seeing that you're concerned about here, particularly, do you think Merkel will get back in, for example? Could there be something destabilizing Germany as well?
I think most things have been touched on. I would like to start with another thing. I think it's extremely worrying that we really get so caught up in the little things and what does Brussels do and what do in the little regulations we keep on. I think a lot of us have really forgotten the big picture and the big idea behind the European Union, and it's I think it's a guarantee for peace most of all, and I mean we're taking peace for granted. It's not so long ago that we had wars in Europe as well, so, and it's just a guarantee for wealth and stability, and I think it's very, very difficult or very dangerous to mess with that idea, and I think it's all of us have to constantly work on keeping that idea alive, I think. And I agree with the other people. If things go bad, they will probably go bad in other countries before they hit Germany. But I think now, and we don't know what America is going to do, but we will need there's a huge political imbalance if there's no power in Europe, and there will be no power in Europe if we go back to single states and if we can't speak with one voice. So I'm extremely worried about that. I don't see any scenarios for Germany. I think the right-wing parties will be strong here, unfortunately, but not destabilizing us.
Just drilling down a little bit more into some of the fundamentals. We've obviously got a huge amount of office space being built right next door here. You're financing core, especially, Daniel. What's the sense of you for the occupier markets here, and specifically the office markets?
I think we're very optimistic for Frankfurt CBD, for example, but we're seeing, and we're always going around saying we're core lenders, so we're not seeing all the secondary and C locations, but still we see money coming in again into locations. Thomas mentioned this earlier: Frankfurt outskirts, single tenant, few 2 years lease term, and I think I'm very skeptical for those, because if a building hasn't worked in the past 15 years, I see no reason why it's going to work in the future with all the uncertainty. But I think we're very optimistic for core markets and for inner city locations on the office market.
Okay, good. And Sven, in terms of the legal regulatory side, are there any specific things that is on your radar, let's say, for next year that you think may impact either positively or negatively on the real estate investment?
Well, regarding the relocation from the UK to wherever, it will be a passporting issue to some extent. That like a UK company would probably think about, where can I relocate and get a passport that still works in the UK, in the EU, without relocating the least amount of workforce. So that's a regulatory issue with regulations that's already in place. What's on the radar is abandoning share deals in Germany. It might be political campaigning, but it's fairly loud. I have not seen a draft bill, which is a good thing. But I mean, there is the sentiment that government misses out on share deals, and these need to be taxed. But that will be quite a big thing. So it's on the horizon, but not in the immediate future. And there's also there is a draft bill out regarding restriction of mortgage lending that would put BaFin, the supervisory authority, in a position of a sort of policeman. When it detects a real estate bubble, it could actually restrict mortgage lending to banks.
Okay, good. And from your point of view, Markus, are you looking at those already? What are the sort of impacts that you see? Are there sort of risks to your business from that sense, from these regulatory environments?
We take care of that in every single application, every single analysis of transactions. We don't only look at the entry scenario, but also look at the exit scenarios. We look at the Mietpreisbremse, so the rental hurdles, and how they impact investments. We look also at new developments in technology, digitalization, and which might also have impact on the occupiers market. And we all factor that into our assessment. Also regulatory issues coming with Bail 4 and which will impact the lending capacities of banks. And one thing I think is for certain that the banking industry will definitely shrink in numbers of banks being active in that sector.
And just briefly, what do you see in terms of, let's say for 2017, in terms of the lending market? Do you think there's going to be higher loan to value? Do you think it's going to be more expensive, less expensive for people to borrow? Do you think there will be more, tendency to lend more into these niche sectors or into development? How do you see that?
Yeah, that is, I think every bank needs to find their business model which is viable. And you're in a competitive environment where margins are under pressure. You're in a regulatory environment where you increase your equity positions, and they both impact on your return figures. And then you need to really adjust that where you want to be active and what is the amount of volume you can handle, and what is your cost base against it, and how can you save on this side, and how can you make sure the other side is profitable. That is an ongoing circle, and it's not one measurement which takes care of all of that, but as everything is under investigation and in preparation of what is to be expected. And we are very active in a lot of these sectors. Besides doing the regular business, we really undergo to every single process. We look at every single step we're doing and seeing how can we save money, how can we do it more efficiently, how can we maybe outsource, how can we do things more modern and take care of what awaits us in the future. On the business side, to go into niche is in every boom phase, you go into a sector, and then once it cools down, then the liquidity in these sectors might then be limited to be sold. That is a thing where you really need to balance out to what extent you can do that and not. What we see as well, when we say, is the risk increasing, we see an increasing gap between the market prices, the valuations we get for markets, and the mortgage lending value, which is important for our fund brief cover. The gap is widening dramatically, and that as well has an impact on what we can do.
Okay, good. And Felix, in terms of your business, where are you expecting it to grow? How much of that growth, in terms of the investor appetite, is coming from outside of Germany as well?
We're seeing more and more UK, US investors looking at a niche, and I partly agree. Obviously, if there's a strong market, general residential is sort of scarce, so people are not looking at niches, and I think that's what's happening. Nevertheless, I think in resi or student and micro living, we have this very high demand for that space by students and by young professionals. So, taking the values sort of aside for a moment, I think in terms of the rents, we should have very good, stable rents in these assets. They should grow. What we have seen before, when the market is actually going down, more people study. So we see an increase of rents actually, but there's also, in terms of investors, there's BBK just bought a big portfolio from Unique, so there's also German pension funds now. I think Allianz is moving into the sector, other big pension funds. So I partly agree with that it's a niche market, but I think it's developing to actually an asset class in itself. Yeah.
Do you think that residential, student housing, senior living will all begin to move into sort of one asset class, or do you see them as all entirely separate?
I see them all part of residential as an asset class, so they are sub-sectors of residential, and some of these sub-sectors might evolve into sort of asset streams within themselves.
Okay, good. Maybe Thomas, just give us an overview of where you think we should be looking in terms of sectors. Do you think resi is going to be a good opportunity? Where do you see retail heading? Logistics obviously hot in terms of investor intentions. What are you seeing at the moment?
The question is what is not hot these days. I think the most growing sub-segment, technically speaking, is the mixed-use property, which means there is Starbucks retail space, there are 2, 3, 4, 5 floors office, and then it's resi over there. I mentioned this ridiculous, but I think this is again where we're facing more pressure by local authorities. You can't build anymore a 100% office tower in Frankfurt. You get a yellow card by government or authorities and say, okay, then let's make 20% please retail. And vice versa, let's make something called housing or affordable housing in that. So again, the most growing thing is these mixed-use things. I think the next level will be then the campus. Coming back to these so-called niche things, of course, micro-living, it's the money printing machine in the next days, next years, no doubt, absolutely no doubt. Welcome. Really, well, I'm so rational sometimes, yeah. No, but this is of course a thing. On the other hand, I think this is no commercial, but the whole parking activities, it starts increasing due to the investment of a hedge fund into Upcoa. This will also drive the market, and I think some of here who try to profit of that, by the way. I have sometimes my doubt on the office case. Let's say 25 years old office in the middle of Frankfurt. I have no doubt on that. That will be then refurbished or returned or converted into something called resi. So again, we all came back to the resi thing. I have my concerns on the high-end luxury segment. By the way, this is I don't see that. Well, a lot of British people came here from banks. I don't think so. But I think the office market, it's a stable situation. You can't expect any double-digit rental scenarios in my view of the world. And the rest, the next niche, so-called niche, is the logistic industrial sector. We see a totally new phase of generation of product 4.0, whatever this means, by the way, who are really close to the city borders. This is a link to the spot price, which means they get smaller and they get extremely high prices. If you go to the outskirts or in the middle of nowhere in periphery, nobody wants to have this logistics anymore. They come closer to the cities, and this is again where they are in the competition of housing, affordable housing, or logistic, of resi, or whatever. And this is again where I see that the cities in Germany or in Europe, they are the most profiters, and they are in competition and not the countries. Currencies or whatever. So Frankfurt is in competitive to Munich and especially to Berlin, maybe to Brussels and also to Paris, but not the outskirts. So I would bring all my money into something called urban hubs, and then let's see what happened, whether it's logistic or parking or whatever.
Okay, and I think the idea of the mixed use part is actually quite interesting, because you've got that is going to be a mixed use tower being built next door. In discussions on logistics, interestingly at Beyerle, there was beginning to look at, because you've got electrification of lorries coming in, therefore more silent lorries. So these urban centres could also then be what were being called beds and sheds. Which is then residential mixed use with logistics, urban logistics. Markus, in terms of the office side, how do you see Frankfurt versus Berlin? Berlin is obviously beginning to improve some of its office. I know some of the resi is moving here. Is there more of a crossover now between Frankfurt and Berlin? Is Berlin becoming less of simply residential and media and more of a capital city in the sense of London and Paris? And
Berlin is not becoming a London or Paris because the federal system of Germany does not reflect that, and there will always be local hubs being responsible for various sectors. The resi part of Berlin was booming because I think 90% of flats are rented accommodations, and there's so-called UK investors said unbroken freeholds, which is something hardly available in London. So you get an entire house with flats in, and you have rental income and not single condos. That is continuing to be there as long as the rental prices are where they are. Having said that, there is even in those houses, the demand for purchase, because they see that the rental is paid in the market is way higher than this currently in those houses. You can still, I think the average in Berlin is by 6 or 6.5 euros a square meter, and the new rents are way above 10, but particularly what's within the S-Bahn sector. So there is still that way, even if they pay 27 or 30 times the annual rent, but based on the rental value, the ERV, there is still ability to growth, and that's why it's in the particular arena. That's why they try to put the cap on it. That's why they try to limit the growth in that sector. Is that competing to Frankfurt? Frankfurt is a different city from the layout. It was always more expensive to live city center. You have very expensive outskirts, and you have an industry which Berlin didn't have. And I think Berlin is living now what was expected after reunification. That companies are established there, moving there, the government is there, the lobbyists are there, and now the fintech gives a perfect environment for those people who look for cheap housing, for also what's cheap office space, to accommodate their needs, and that's where the growth at the moment comes from. Berlin vacancy rate on office is less than 3%, but the stock itself is not up to date. You don't see the high-rise, or hardly any high-rise office towers like here in Frankfurt, and that was discussed as well. That the density needs to improve in Berlin to make really sure that can cope with in the long run.
Okay, good. And Sven, in terms of the investors that are coming to you, which are the cities that they're favouring, especially in Germany? Are they looking at Frankfurt? Are they looking at Berlin? What's the general kind of overview of the interest that you're seeing?
Well, I'm not sure whether it's
remembering Olaf is here
representative like for all investors, but the guys are coming on to us for residential are mostly coming actually for Berlin. And there's the saying, or at least it's what they say, there's not enough bricks and stones in Berlin for everybody to buy their share, but everybody's trying. And I mean, there's still some fuel in this, because this turning around the city from unbroken freeholds into condos, it's not done overnight, but district by district, it's a guesswork, like which district will be hot next, and this will be purchased. This just takes time. So, and residential clients make me travel to a new train station that I had not known before. That's Leipzig, and that seems to be the next space. At least some investors seem to think that. Regarding office or commercial, actually, it's not that much from the clients that we see that they're looking at a certain, well, certainly looking at the big 6 or big 7, but with these conservative clients that we have, mostly are looking for something that's called core and that's not available anymore. So they will have to bear with something that's a bit more, let's say, complicated. I've seen conservative investors now purchase shopping centers. There was actually a lot to do still to refurbish, and 3 or 5 years ago, that was not in the cards for them actually.
Okay, good. And interesting. I mean, maybe pick that point up, Daniel, because core, very, very competitive area, but also an area that you lend in. How difficult is it now to find the available product, particularly in Germany? Is there a sort of redefinition of what's core in order to be able to find that product? What's happening there? And the other thing I wanted to just check was, in terms of the types of investors who are coming in, are you seeing different groups either coming in from different countries, fresh buyers and investors coming into Germany?
Just speaking for IT, if that's changing, there is a certain danger, because then we're just under too much pressure. If we start changing the definition, then I think we should, instead of calling a secondary office core, we should rather be doing something else. Right now, we're still finding enough deals for us, and I mean, there is not enough product, obviously, and then for banks, we're not just losing to each other, but we're losing to equity as well. So the equity buyers are back back very strong. And I think it will be interesting now because interest rates have really gone up significantly. If you think of, okay, you could still say they're still at a very low level, but if we look, and I just checked yesterday, the 10-year rates went from 30 basis points to 60 basis points in a few weeks' time, and that has a major impact. If you're buying at 4% a core office property, that has a major impact, and I think there will be a bit of a standstill there, and I don't think we will see transactions happening very quickly in the next few months and maybe half year to come. So for us, probably we will have to find niches as well if we want to continue. The question is, and Markus said that, do you look for other product at the peak, or when's the right time to investigate other product? But core is increasingly difficult to find. In terms of investors, I think it's. I would say, and I'm not, it's just what we're seeing is there is a lot of Asian money coming in, Middle East as well. But fortunately, this time I would say it's different. All people are acting with local asset managers, very good asset managers. So it's not what we saw in the past, people coming in from far away and not having local expertise and an idea of where they're actually investing to. And so I think that's quite good there.
Okay, good. We did a session in China earlier this year, and one of the things that came out very clearly from that was that people were looking for areas where there was rental growth, cities, not countries, and specifically where there was also infrastructure and development, things that were happening that were going to drive that city forward. If we're looking to invest, where should people be looking? You can either choose Europe, or you can choose to stay with Germany. Up to you. Where would you invest your money?
I mean, we talk about this concept of brain hubs, which is out of a Harvard study, which analyzed that in the last sort of 10, 15 years, people are moving to brain hubs, which is good universities in the center, technology companies around, then other companies also settle around, and that's where people say is the best quality of living because they get good jobs, they get good living space, and there's about sort of 20 brain hubs of that kind in Europe. For example, Lisbon is moving into one, and I would invest into these brain hubs, big university, European cities in residential and mixed use, retail on the ground, residential above. Okay, good. Markus?
Yeah, I'm happy that I bought my house 5 years ago in Berlin. It's with that price is rather difficult. I see two trends there. So the one is the trend of urbanization, and you look at cities where attract people. It's not that we don't have sufficient housing in Germany; it's just on the wrong place. So the movement to the main hubs that brings the housing markets under pressure. But there are areas in Germany which will be predictable. So 10, 20, 30 years will be vacated. How you deal with that? And the other thing is really how flexible and how quickly can the space adapt to an ongoing modernization, digitalization, and you mentioned the self-driving cars. There will be less cars in the streets. You have a lot more space than there. They will not all be outside, but your own car is parked maybe 95% of the time somewhere, and you use it for 5, if at all. And if you see what kind of potential is in that number. Of course, there are peak times and low peak times, but that has to do as well with flexibilization and work time. And I think we're going to see not a 9 to 5, but a more variety in work times, and like this, a better share of capacities, and with that, a lower need of space and cars or production. So, and that is all going to happen in those hubs where the people want to live.
Okay, good. Sven?
Well, I'm mostly not in the position to do the investment decisions, but rather do the contracts, and the clients come with the property. Let's see. I mean, urbanization regarding residential is an obvious choice. Let's see, like over time, maybe with agile working and teleworking, there will be a trend in the future that reverses that. I'm not sure. What I'm also seeing is that actually clients take a contrarian view and say, okay, UK has come back, the pound has weakened, so we buy on the pullback actually for something that's not related to the financial industry, but rather a supermarket in Birmingham. That might be something for 2017 that doesn't do so badly.
Okay, good. Daniel?
In terms of residential, I think it's these. I remember we had a client who said he invests in cities with soul, and I think those were also cities with universities, with urban life, young people, and I think on the resi that's probably a sure factor. I agree. We will have areas in Germany with big problems on old people and less industry and a dying residential market. I think what will be interesting is how retail develops. In the contrast, logistic versus shopping centers and how that turns out. But I'm not going to make too many predictions.
Okay, good. Thank you.